Greetings. Welcome to Pro Readiness Traders. This will be Chapter 3. This subject will be taught about trend lines. The platform that we are working on was explained in Chapter 2. So if you want to learn about its functions, go to Chapter 2. If you want to also learn about the candlestick patterns, go to Chapter 1. That particular chapter is free. ProReadiness.com is the website that you need to go to, or you can just go to our Facebook page at Pro Readiness Traders. A few things I didn't cover is the unnamed part of the subject, and this particular chart, we're going to give it a name. This is the beginning of us starting to use trend lines, and once we finish the trend line subject, we're going to go work with indicators. So the subject of this chapter is trend lines and its indicators. So we're going to give it a new chart layout. Now, if you notice right here, it says simplify your trading by saving more chart layouts, and it offers what is called a 30-day free trial. I recommend that you do the 30-day free trial, but only do it once you understand how to put moving averages, trend lines, and everything in the basic lesson with what I am teaching before you go to the 30-day free trial. But you can start the 30-day free trial now so that it would stop a lot of the pop-ups. So we're going to close this for now, and I did start with this particular. I do have, this only allows you to have one selected layout. So we're only going to be working with one window, which is this right here. Now, if you become a member, as you get more advanced and more started to actually trade, you can do like me, which I actually have pay the pro rate of $60 a month, and I get what is called 8, the max of 8. So I can go from 1 to 8 charts on one screen. And I actually use those 8 charts to place somewhere around 32 charts within 4 screens, 4 monitors that is. So I may be running, say, 16, 2, or I'm sorry, I may be running as many as 8 windows on one particular monitor, 8 charts. So that gives me about 32 charts, and that's about 32 markets I can track. And but however, the basic charting and what we're going to do, 8 markets are due within itself. 4 markets are due. Tracking 4 markets, but sometimes I jog down into the 15 minutes and the hour, and I need more markets to track to look for my setups. Okay, so I don't want to veer away from the subject. We're going to name this first chart. So we go to load chart layup. We right now it's unnamed, and we don't want that. What we want to do is we want to rename it. So we look for rename, which is right here. We're going to delete that. Right? We'll delete that, and we will call it first chart. Okay, so we gave it a name, so we know it's first chart. Now, the subject is trend lines, and what we're going to do is create a trend line, and we're going to talk about this trend line, and we're going to talk about the rules of creating a trend line and some of the things you need to know about a trend line. So what we want to first start doing is we want to make sure that this particular chart we're looking at, which is the S&P 500, we want to make sure we look for the lowest of the low. And we can start a trend line right here. We can start it to go up here and talk about the subject, or we can continue to shrink it and just look for the lowest of the low, which I will do. We can actually obviously see that there's an upward trend here, but remember, all this information that's conveyed to us is not actually conveyed to us. We don't know anything about. Imagine we're trying to pretend we don't know what's going on way out here. Remember, this is a trend line that started in May of 2020. Here's 2021. So we're going back almost a year and a year. Let's see, it's now December. So we're talking about roughly a little less than a year and a half. Now, I'm going to blow this up. What I mean is maximize this area, because this is where we're going to start drawing our trend line right here. And in order to do that, we can just get this magnifier right here. And this is to save time. This allows you to save time in terms of trying to look at things. So you don't have to go and try to, you know, blow things up and magnify them, stuff like that. So we see the bottom of the area right here, and what I'm going to do is grab a drawing tool. Let's see if we can get a drawing tool in here. Okay, that's a trend line, and we're going to make this a favorite. So we're going to click right here, and you notice right here, this little box popped up. And you can move this box over here and various different places. And it's just a toolbox that prevents you to have to come over here and click to find tools. That's all that does. Okay, here's the ad that just popped up, so we're going to close out. And these are going to continue because I wanted to show you that how much you can do with one chart on a free chart, free platform. How much you can actually set up a strategy on a platform that's completely free. Okay, and this will give you all the practice you need to be confident in setting up your platforms. Okay, I wish I can get rid of this volume because it's in the way, but it's okay. So we see this is the bottom, right? We know this is the bottom. Now what we're going to do is come here and click on trend line, and we're going to just kind of like start right here. It's not magnetized, and we just go right here. Now the rule is that normally you go from the lowest of the low. You would take that trend line and you would bring it up to this. It's basically the second bar. So this was the trend line heading up right here, right? That's what it looked like. But however, this trend line became no good because it broke right here. So that was the original trend. Now, remember we're in the day chart, and I want to go back and show you what does that look like in the hour, because this day is over a year and a half. So it'd be fair to say that these are almost 300, 400 candles if we go back to our original size. You know, those are a lot of candles because that goes all the way into 2021. And how many days in a year? 365. Plus we're adding an extra May all the way to, it looks like March. Let's see, what is it? March 20th? May, June, July, August, September. Yeah, so, you know, 2021 started right here, January. So from March, April, May, June, July, August, September, October, November, December, January. We're talking roughly almost 2 years worth of candles right here. And that shows you how long that trend has been. But however, we're in the day trading. Remember, what is one of our rules? That we're not going to be in the market more than 2 weeks. And we're out of that market. We're making our money in 2 weeks because we're day traders. We're not long-term traders. So technically, I didn't have to look at this in a long-term way. But I'm going to look at what is called these candles right here. And this is what is called, let's see, how many days is this? This looks like 1, 2, 3, 4 days worth of information. Now, in 4 days, you could actually make some pretty good trades. You know, let's just jump into the hour. See what those candlesticks look like when we go there. Okay. Let's see if we can shrink it and find the candle within that hour. We would have to continue to shrink it. We need to, let's do an auto fit, which is right here. This symbol right here allows us to come and open up auto fit. This fits all the data. So that way when we stroll this way or stroll back to 2021, we should see the candle actually pop up, which for some odd reason we're not seeing it. That's extremely surprising. When we go to the day, we do see the candle, and it's actually right here. Okay, So I just wanted to show you that this particular trend could have actually went all the way up to here, but because we're not going into a 2 year, that's not necessary for us. We're only going into within a small amount of time. So let's just shrink this. We can still use this trend, or we can get rid of the trend. I choose to still use it. And so at the same time, I'm going to open this up. Well, I'm going to get rid of this trend because as I open this up, this trend line become redundant. And I'm going to go back to, let's just say we're right here in October, right? We're going to talk about, since this is a low area right here, this is a swing up, we're going to put a trend right there. And we're going to try to figure out where should our bottom trend should have started within this particular market. All right, and market day and time as well. So we grabbed our trend. We could have grabbed it from right here by clicking there. Now we know we have a trend on here. So when we click that, see that circle? That's your first trend line. And then when you stretch out, bam, no matter where you go, that trend is there. It's going to start right. It's your starting point. Now click there and you cut it off. I do that because I can move this. I can just click and drag. And this is this magnetizing? Yes, it is magnetizing. So let's see if we can take it off magnetize. I don't want it to do that. Okay, we're good. So what we're going to do is expand this up a little bit and continue to expand. And then we will be able to see how we need to, well, let's, okay, so we have our trend line, and there we're going to follow the rule of creating a trend line is that even though we can go from the bottom of the lowest and the highest of the highest, we're going to try to start out. I try to start my trend line around between the third or the fourth bar instead of the complete bottom. I call it, I don't want to be a part of the default club, the default, or following the complete rules, because sometimes there's that knee-jerk reaction where the market has actually went too far down and it may not be completely at the level it needs to be. So if we start at the second line or the third line, however you want to do it, the rule actually of drawing a trend is the second lowest. So from there, you would go to the next lowest after that, which is right here. So and that's this point right here. So now we can take our trend all the way up, create that trend line, and what do we see? There we have it. We have the trend line. And you can see right here where the market continued to trend up, and then it actually went down. And you can see right here where it hit the trend line and continued to go up. And then what we see right here at this point, this candle, this red candle actually broke the trend line. Now the rule of drawing trends, and I'll bring this up a little bit more. The rule of drawing trends is that you have to know the difference between a line break. You have to know what a line break is. You look right here, and I'm going to go ahead and I want to mark that, but I'm not. I'm just going to put my finger right there. You can see, let's just magnetize this a little bit, blow it up and expand this, zoom in on it so you can really get the picture of what I'm saying. Okay, so you see right here where the shadow comes past the trend line. That's what is called a pierce. Pierce is just like you take a thread from a needle and you pierce the needle. You actually take the thread and put it through the needle. You pierce it. You pierce a hole, like getting a shot. When you go get a flu shot, they pierce your skin, right? But it did not actually at that point break the trend line. The rule is not broken because it can pierce. Just because it goes, because the body, this is the body, and we talked about the body in previous lesson 1. So if you want to go back and understand candlesticks and you're new to these lessons that I'm teaching right now, then you should go back. And again, at this trend line information I'm giving is not I like to say this at the beginning. It's not financial advice, okay? We're talking about trend lines. We're talking about chart, using the charts. This is no way of giving you some advice to say that this is a guaranteed way of just looking at trend lines as if this is going to help you uh, become financially rich. There's other indicators that are with this. That's why the name of this subject is trend lines and their indicators. However, you see in the green candle, it goes up. You see here where the body breaks the candle. At this point, this trend line itself is no good. The rule has been broken. It's not even any good. So I can shrink this trend line at this point because we're no longer going to use it anymore. And I can also keep it as close as I can to the body. And see, the reason why I'm having a problem because it's magnetizing, and I need to get that off of there. Sometimes I'm just having a lot of problems. Let's take this ad off. Okay, so we see at this point the trend is up. It's working for us. It's moving its way, right? Okay, and that trend right there, um, I talked about earlier about you know trends being your friend. There's an old saying, the trend is your friend. I talked about when we have these trends, it also can help out in terms of seeing where the bank is going, where the money makers and the people are moving this market. It's in an upward trend. You stay with the trend when it is trending, and when it's broken, you leave it alone. You no longer recognize it as a trend, and you start trying to formulate a second trend. Now here, because we have almost 4 bars right here, we can actually create a trend at this point. So what I can do is clone this particular trend right here, and I do that for the sake of trying to, when I'm trying to get an extra trend line. And we can say, since this is the bottom and this market is moving, right, we can start a trend right here at the bottom if we want to, but we have to follow that rule, which would be the second bar, and that would be roughly right there. So this would be our new trend, right? That particular pace up. Until this is broken, that's the trend. That's where the market is going up. Now, sometimes trends cross, and we can do that. We can cross this trend, right? Because at this point, as it goes up, if it does break, it is possible that the forwards that it was go is right here, and then continue to go up. Depending on our other indicators and where we are in the market and what wave we're in, we may be in another wave of uptrend. Again, this is another information that you're not aware of right now because you're just getting beginning. This is just the beginning stage, and we're just talking about the subjects of trends, and it all come together. Just roll with me, bear with me. Again, this particular subject of chapter 3 is going to give you almost 10 indicators. That's, you have enough tools in your market, in your toolbox to build a chart at that point. Okay? Now we're going to go over and talk about, you know, not allowing these trends also form different shapes. If you went into my candle subject, we talked about how trends can be flags, how it can be consolidating, going sideways. We talked about the knee-jerk effect where here it is, the market right here went down and it continued to go up. It broke the trend and then went down and continued to go up. That's a knee-jerk where it just pierced it, fooling people, and then bam, it goes up. So we have to be careful of these knee-jerk effect that the market goes down, because that's where people are putting stop losses at. That's thinking like the sheep. People thinking the market is going down. That's what the big financial people want you to think, and actually they're still going up, right? And remember, we're moving with the banks. This is where people would have put their stop losses, and they would have kicked them out, and they would have lost a lot of money. Billions and billions of money is on this, you know. So it's very important to not have that sheep mentality, not think like the herd. We're predators, we're lion hunters. We're going to think like the banks. We're going to be moving extremely well like the banks, you know. We want to, get the money. We don't want to fall for the banana in the tailpipe. Okay, moving right along.